When you're taking home $5,000 a month on average, and it can fluctuate, you may have a bad month and an incredible month, but when you know that you're going to take home $50K this year, you better be a freaking S-Corp. You will regret it.
People ask me all the time, how much should I be making before I start an L-Corp, an S-Corp? Like, what should be my gross revenue? Is there a certain magic number? And then the other really big thing that people ask, Mark, is how do I know if something is tax deductible or not? Like, is there a rule of thumb that says, okay, I can write this off, but I can't write that off?
Okay, so let's start with the S-Corp to answer the question, and then we'll diagram it so it resonates. If you're netting, it's not so much what you're making gross, it's what you're taking home. That's what I want to know is what are you taking out of your business to go pay for groceries, go on personal trips, pay for the mortgage, the lease on the apartment, the condo, townhouse, whatever you're living on personally, that's the number I want to know. And when that exceeds, even in California, New York, Illinois, wherever, I want to see, because those bigger states have more regulation with potentially the cost of having an S-Corp. So we want it to break even or better. Where it starts to break even or better is around 40 to 50 grand net. So when you're taking home $5,000 a month on average, and it can fluctuate. You may have a bad month and an incredible month. But when you know that you're going to take home $50K this year, you better be a freaking S-Corp. You will regret it. And then as you start to make more money, the savings just starts to add up, and you'll use the same S corporation, frankly, for the rest of your life. It'll be your operational parent company for the rest of your life. So that's break even. Now, why this matters, let's just quickly, so it all resonates. If I'm a sole prop, I go out and start out with no structure at all, or I'm an LLC, and I bring in 100 grand. And I'm out there killing it, doing the best I can, making $100,000. Maybe it's my first year out of the gate or who knows what. And I have $25,000 in expenses. I'm writing off everything I can, and we'll come to that situation too. What can I write off? And I net 75. So I'm going to be taking home maybe that six grand a month. Well, at this point, I'm going to pay self-employment tax of 15.3%, and quickly doing the math on that, that's 10 grand right out of the gate. Then I'm going to pay state tax and Fed. So boom, boom, boom. And when you have state of 5 to 10% and federal of 10 to 20 at least, I didn't even say 25% because you're going to be going up in brackets, but it is a progressive rate tax structure. You could be at 30 to 40% in taxes. Look at that. I mean, that's just insane. And an LLC, it's the same. LLCs do not save taxes. So this blindsides so many small business owners, and it's brutal. And again, that could be just a brand new dentist, a brand new realtor, a brand new accountant or lawyer, anyone. So what's the transition? We can take this LLC and make an S election. Now, buckle up. It's really expensive. We charge $250. So when you have that LLC and you're paying that self-employment tax on the 75 grand, if we can convert it to an S corporation, you make the same money. You have the same expenses. You take out money whenever the hell you want. But we're going to split that 75 into two pieces. And at that level, I might do a 50-50 split. There's a continuum here I'll show in a minute. Because once you have your S-Corp, I would bet half of you that have an S corporation, your accountant's probably screwing it up, and you need to take control of that. So that'll be next. But we might do 37.5 as a salary and 37.5 a dividend. It's all a draw. It's just that we're going to call this on paper a W-2, and you're going to file your 4 payroll reports throughout the year. You pay your 15.3%, and the IRS is happy, yada, yada. But over here, we have no corporate tax, no FICA, and we avoided the F word. We hate the F word. So we're just off to the races. And this is no corporate tax, no ACA, which is Obamacare. So we are saving on all this. So we basically just cut this self-employment tax that was 10 grand. We cut it in half. So we just saved $5,000. So when you live in a state and you go, well, California, I got to pay an $800 minimum tax, and I got to do payroll reports. That's going to cost me $1,000 throughout the year. And I got to do a tax return that's going to cost me, maybe $1,500. Okay, so you're out $2,500 and maybe $3,000. You're out $3,000 in that, just right here at this level, to really maintain the S-Corp. Now, by the way, you got rid of a tax return over here. So you're going to save $500 here, not doing this other tax return. So net, again, you might be a $2,500 cost to have an S-Corp. Very, very common. And that's having a pretty good tax advisor. So $2,500 is the cost. What did I save? $5,000. So let's do the math. This is hard. Spend $2,500, save $5,000. I don't know. Okay, do you have a calculator? Because I think, I don't know if this is a good deal or not. Am I being too sarcastic today?
No, you go. You go.
All right, so the more money you make, the more money you save. And even Joe Biden in 2016 had an S corporation for his book deal, the year he ran for president the first round. Book deal worth $13 million. He ran it through an S corp. He took a salary of $800,000. I mean, that was like a 3% allocation towards payroll. He saved close to $300,000 in FICA and Social Security and Medicare. It was buried in the Wall Street Journal on page 32. Trump, who's a real estate professional like many of you, takes depreciation on all of his buildings, wipes out his income from The Apprentice and some retail, and he pays $600 in tax, a very, very common strategy for real estate professionals, which he claimed on his return. I have a copy of it here. And his atrocity makes the first page, like, oh my gosh, this guy's a criminal. He's paying, so little in tax. All the realtors in the Realtor Association National, they were like, oh, can we not make a big deal of this? This is a great thing. We all do this. We love this. He's not a bad guy. Shut up, So it's just sad how mainstream media would couch those two issues. And I'm not trying to be political here, but I'm just trying to say this is super common. I want to be a real estate professional. I want an S-Corp, whether you're Democrat, Republican, whatever. The Main Street strategy is the same. So anyway, the S-Corporation is this side of the equation. We'll get over to the Real Estate Pro and cost seg and all those things here in a bit. That's the break-even point. And I want to answer Chuck's second question. Code Section 62 of the IRS says any expense in the production of income is a tax deduction. Any expense I incur to go make money, as long as I can show I had to spend it to make money. So dining, I take someone out to lunch. Traveling for business and buy my own food. I can write off my own food, not even meeting with anyone if I'm traveling. Travel, I'm going to travel to a conference. I'm going to travel to go look at real estate and buy real estate in another market. Airplanes, Airbnbs, Ubers, taxis, valet, because I'm traveling for a business purpose. Electronics, microphones, cameras, lighting. Now that we all have a presence on social media and with our websites, laptops, iPads, anything technical at all at Apple Store or Best Buy is going to have a business purpose, and we're going to write it off. Healthcare. I want to be doing my health savings account. So it's not just my health insurance, but expenses with my healthcare. And I've got to choose the right structure there. My marketing. I could even rent my own house to myself. I want to use for a few days out of the year for special events. I want to take the home office deduction. Auto, a huge deduction for those in the real estate community. Am I going to take actual or am I going to take mileage? I want to put my kids on payroll if they're helping me out in my business. I don't pay taxes and give my kid money. They all get a 1099 or a W-2. They're all a part of a board of directors and have business duties beyond the board of directors. So I want to have everybody involved in the business. I might take a deduction to put money into a retirement account. I want to invest with my retirement account. I mean, the list goes on, but that's the point. I have realtors that write off their ski lift ticket because they show property at Deer Valley when they take clients out. And so this lift ticket is not for recreation, it's for clients. Take clients on retreats. So it can seem recreation, but I want to create a business purpose. Whenever I travel, I want to find a business purpose. Years ago, my wife would say, can you just take me on a trip and not make it a tax write-off? Please just show me you love me and not take me on a trip that has a tax write-off. And I'm like, no, I can't do it. And so I want to be thinking outside the box. All right, so there we go, Chuck. There's a couple answers there. Any follow-ups on that?
Yeah, we have a ton of different questions already in the chat.